Hey everyone, welcome to another video. In this video, I will be discussing a level 2 strategy with the help of an example of Tesla from 3rd of September 2020. This is a bit advanced strategy, therefore I will explain the strategy first with the help of another easier example so that it gives you a good insight before we jump onto the actual example of Tesla from that particular day. Let's take an example of a stock around the $10 mark, and the last traded price of that stock is $9.5. Now, before going long, the stock has been in an uptrend, and as a day trader, or if you are a scalper like me, before taking long, I'm waiting for the $10 mark to break because I see that there's a big ask, 50,000 shares on the $10 mark. 500 means 500 into 100 based on my platform. I have set it like that, but it might be different for your platform. So you have to check the settings of your particular platform. But for me, it's 500 multiplied by 100. That is 50,000 shares at that particular price point. So as a scalper, I'm thinking that if the ask goes down 500 to maybe 100, and then I will take it long for a continuation move upwards. Let's see, on the first retest, the stock goes from 9.5 to 9.7 to 9.8 to 9.9, and on the $10 it got rejected the first time, and it never broke that level, the $10 mark. And then it dropped down to maybe 9.6, 9.7. So what does the stock do? It goes up. This is the $10 mark. I will put that here, $10. It got rejected, and then it's testing that level again, and then it got rejected. On the second retest, maybe the ask was 50,000 shares. Some of the sellers, ask means sellers, are waiting at that particular price point. Some of the sellers got consumed by the buyers, so now we have 45,000 shares at that particular price point. But the stock rejects again. So the stock rejects on the second retest. It drops down to $9.6, say for example. Now it's going back up, 9.6, 9.7, and now you see another big ask at $9.8. What does that mean? The ask at maybe $10 went from 45,000 to maybe 30,000 shares, and you see another 40,000 shares at the $9.8 mark. So what does that mean? This means you have to look at the emotions of the sellers at this point. Sellers are not expecting the stock to go to $10. That's why they reduce their price to $9.8. This is what it means. If you're a seller and you expect the stock to go to $10, you will hold that price. But if the sellers are stepping lower, that means the sellers went from $10 to $9.8, that is a bearish sign, because the sellers are not expecting the stock to go to $10 and they want to sell their shares at $9.8 instead of $10. At this point, this might create a confusion, but I want to clear it out that there will be another ask. Say we have ask at $9.6 as well, 9.60, and the size is maybe 2. I'm not talking about small numbers. So reading level 2 means you have to look at the big numbers around critical level and what's happening with those big numbers. I'm not talking about small numbers here, because if the stock is going from 9.5 to 9.7 to 9.8, there will be ask at 9.8, 9.81, 9.82, but the ask is very less compared to the ask at $10. So we have to look at the big numbers and what happens with those big numbers on the level 2 box. Before we jump onto the actual recording of Tesla from 3rd of September, let's look at the bigger picture first, on the one-day chart of Tesla, what was happening with this particular stock. This is Tesla after the split. It pumped for a day and then it got rejected around the $500 mark. We will be looking at the example of Tesla from 3rd of September. The high of this day is 431.80, and we can actually predict the high of the day with the help of a level 2 strategy I will be discussing in the recording. This is the recording of Tesla from 3rd of September 2020. Before we get on to the recording, I will explain my layout. This is my 1 minute, this is my 5 minutes, my 15 minutes. This was supposed to be my 60 minutes, but I think I changed it in the pre-market and I forgot to change it back to 60 minutes. And this is my one-day chart. Now Tesla made this high of the day around the 425.82 mark, and this was a perfect break of the high of the day. If you entered here with a profit target of 430, that is a $5 move on Tesla. Your entry is around the 425, 426 mark. Your profit target is 430, which is a perfect trade in my opinion, because you entered at the break of the high of the day, and then okay, so it broke 430. I think if you entered here and you exited here, that was a perfect trade. You could have made maybe 5, 10, 15%, or maybe even 20% depending on the strike you are taking. But I missed this move. I will fast forward this a bit. It's consolidating. It's okay. This looks like a perfect trade because buyer stepped in at the previous high of the day. This was the previous high of the day. This is the new high of the day. Buyer stepped in again at the previous high of the day. And it's kind of making a bull flag. If you see, this is the bullish movement. This is a flag. I think the flag will break if it breaks the 430 level. and I think 430 is a good entry point for a further continuation move up to maybe 435 as your profit target. Okay, it's not breaking yet. Now my entry, I will pause this video for a second. It's making a flag. It made a bullish movement. It found support at the previous high of the day. This looks like a perfect trade. If you trade based on just the charts, this looks like a perfect trade. And my entry would be at the break of the 430 level. If I see a good buying on the time and sales and everything, I think that will be a good entry point for a further continuation move up. Okay, so there was a big ask at 430 that got taken out in a second, and this is my entry. But I think if you trade based on the charts, this was a perfect trade. You can also put your comment down below and tell me that is it a good trade or not based on what is happening at this moment. It broke the 430.5. Now it's 430.52. Okay, this is concerning. If I enter a trade, I don't want a big ask at a particular level. As soon as I entered at 430 break, so maybe my fill was around 430.2-ish. I'm trading options, but still, and I see a big ask at 430.5. If a bull flag is breaking and the sellers are expecting the stock to go up, why would they place their order just after the 50 cents of the break of the bull flag? And that's how people get faked out. People who just trade based on the charts, they got faked out here because they entered at the 430 level and there's a big ask at 430.5. But this is not the end of the story. Let's see further what happens. How many shares are there? This is 51 plus 51 plus 1. So this shows the sum of all the shares up until that price point, A size. But that is 10,300 shares. Keep that in mind, 10,300 shares at 430.5 mark. Now I will play the recording again and let's see what happens in the next few seconds or maybe milliseconds. Okay, what happened here? There were 10,300 shares at 430.50 mark, and the ask at 430.5 went down from 10,300 to 5,100. But then there's a big ask. Some of the shares, 26 plus 26, 430 from different market makers. So it's 5,200 shares at 430.0. That means there were 10,300 shares at 430.50 level, and some of the sellers from that 430.5, they stepped down. They reduced their price from 430.50 to 430. As a seller, if I'm not expecting the price to go to 430.5 or break the 430.5, I will reduce my price. Sellers are scared at the moment and retail traders are getting faked out because there was a big ask at 430.5. That would have been my exit point because as soon as I entered at 430, I saw a big ask. But if you're still holding and then you see another big ask at 430, and the previous ask got reduced. So that means some of the sellers from 430.5, they reduced their ask from 430.5 to 430. This is a bearish sign because the sellers are not expecting the stock to go to 430.5. Let's see what happens later in the day. So it never broke that level. This was the high of the day. This is the entry we were looking at, and 431.8 was the high of the day. So traders who just trade based on the chart, I think they got faked out hard. Hopefully this video helps you to avoid fake outs in the future because if you're a trader who just trade based on the chart, your exit would have been most likely at the break of 428 or 425 and your entry was 430. And if you trade options, you maybe lost 5, 10, 15% of your position on that particular trade. But traders who look at level 2, like personally me, I entered at the break of the 430 and then I exited at 430 again. So I maybe lost 1, 2, 3%. I paid the spread and then like slightly more. But this is how level 2 gives you an extra edge compared to traders who just trade based on the charts, and it helps you to increase your reward and reduce your risk because in this case you could have exited with only 2-3% loss compared to traders who lost 15-20% because of that fake out. I know it's a lot to take in at first. Reading level 2 is not a piece of cake and it takes a lot of time. I would recommend going back and watching this video a few times. Okay, so I'll give you a homework. Go on Google and just type trading strategies. It will come up with all the symmetrical triangles, ascending triangles, descending triangles, cup and handles, and head and shoulders. But finding level 2 information over the internet is very, very hard. I don't know why, but it's very hard. I could only find a few PDFs and few video examples here and there, and those were very old, like maybe 5-10 years old. but I don't think so those videos are applicable to the current market conditions, because the market dynamics keep on changing every day, every week, every month. But those videos help me to know what to look for on the level 2, and after that it's all my screen recordings. I found these recordings, I found these examples, I knew the strategies, but then after that how to confirm those strategies. So it's very hard to find level 2 information. I would recommend you doing the same thing. So record your trading sessions and then watch your recordings over the weekend. I'm not saying watch 2-3 hours of screen recordings every day, that is not worth it. You only have to watch the recordings around critical levels, around the high of the day, around the low of the day, and maybe around your entries and exits. That is very good, because it will help you improve your entries and exits and get out as soon as possible, and maybe let your winners run. I have a few other examples of other strategies as well on level 2. I did my best to explain this strategy in this video with an example at the beginning of this video and this recap as well, but still, if you have any questions, because I know it's a bit hard to understand, put a comment down below. I will get back to you as soon as I can, and I will see you in the next video.